Welcome everyone, thanks for joining. We have some exciting news to get to, and that is that Mohnish, the jolly looking Indian American investor with the very prominent mustache, has sold out of Alibaba. And this was a holding that he had a high conviction in. It was a very big holding in his portfolio. It made up like almost 20% of his overall portfolio. Now, I know a little bit about Mohnish. I've watched a lot of his content. I read things about him. I know a little bit about his history. I know what type of investor he is. He is an incredibly good investor, and he's kind of shameless in being a cloner of other greater investors. So being a cloner of other investors means that you look at their investing strategy, and if they're doing something that's working, you basically copy what they're doing. Because you get it's not like school, right? You can copy other people's investing strategies and you'll get similar returns. And this is what Mohnish has been doing. He copies Warren Buffett, he copies Charlie Munger, he looks at their investments and he tries to determine why someone like Charlie Munger would buy it. And then Mohnish a lot of times will just buy the same thing. And he did that with Alibaba. 2 quarters ago, he was buying into Alibaba heavily. So earlier on this year, he was buying into it. He had many videos talking about how great of a company it is. And then just recently, just last quarter, the 13F filings came along, and you can see that he reduced his position in Alibaba by 77.8%. He basically sold out of it. For all intents and purposes, he dumped his position at a loss for sure, because he was doing a lot of buys previously at higher price points. Now, this is shocking to a lot of people. Why would Mohnish do this? He's an incredibly skilled investor. He's not someone that would be shaken out of an investment because of scary news. He's not an amateur. He is able to hold on to high conviction picks through turbulent times and scary news and all sorts of things in the past. Why would he dump Alibaba right now? What should we be doing? Does Mohnish know something that we don't? Should I be questioning my investment in Alibaba? I have some money in the company right now. I haven't sold out of it. So that's what we're going to be looking at in this video. I'm going to be going over why I think Mohnish sold out of Alibaba and why I think he did not sell out of Alibaba. There's a lot of reasons why I don't think he sold, and there's one particular reason why I think he did, and we're going to answer that in this video. Now, of course, before we get to that specific news with Mohnish, I want to do a quick portfolio update. For those of you who are new to the channel, first of all, welcome. This is my personal portfolio, and I do something a little bit different than what most content creators on YouTube do. I have complete transparency with this portfolio. I show every company that I'm buying, everyone that I'm selling. I have a link in the description of every video with my current allocation of this portfolio. It's right in the description below this video. And I not only show the returns of it, the losses, the gains, week by week with continuity. You get to see what's going on, but I also benchmark my returns against the broader market, which is the S&P 500. Now, if we take a look at that, this is what it looks like. So the volatility has calmed down in my portfolio quite a bit as I've moved into what I think are more cash flow stable companies, less speculative ones. And right now, we are still ahead of the S&P 500. We're just kind of keeping consistent lead over it by like 4%. So the S&P 500 has returned 24%, and my portfolio has returned 27%. So just 3% above. Not a huge lead, not a convincing lead. I could dip down below it at any time if any of these holdings really took a dive for some reason. If like Adobe sold down 20%, then I could probably dip down below SPY. But I think that over time, the companies that I'm buying, the whole goal of this portfolio is to grow my capital and scale this portfolio as quickly as possible. I want to just keep growing it, and I want to outperform the S&P 500. Now, again, I show this week by week, so if you want to follow along for free, you can do so by subscribing to the channel. Let's go ahead and talk about Mohnish and his sale of Alibaba. Let's go over the reasons why he didn't sell. If you know anything about Mohnish, you know that he's an incredibly disciplined investor. This is not his first rodeo. He has gone through high conviction picks and he's held stocks through all different environments, and he's not a paper hands type of investor. He's not going to be scared out of a position because of scary news. So the reason he sold is not because of scary news from the Wall Street Journal or because of CNBC and he was frightened out of the position and he has paper hands. I'm very confident of that. I don't think that Mohnish really cares about the regulations that much. I've listened to many videos of his, and he is a bottom-up investor. What a bottom-up investor means is that you look at the most roots of the company, the fundamentals of the company, the cash flows, the market share, the moat, all that type of stuff. You don't look at the economics of the world and interest rates. That's top-down investors. Top-down investors look at interest rates, Fed policy, geopolitics. They look at regulations, right? They look at stuff like the regulatory environment in China, and then they determine that they're not going to invest in this whole region because of the top-down view. Mohnish is a bottom-up investor. He looks at the company. He doesn't worry so much about all this stuff way up in the atmosphere. He doesn't worry about regulations. He doesn't worry about the geopolitics. He doesn't worry about that stuff as much because he believes that over time, the company itself and the performance of the company will ultimately determine the results. He said this very explicitly. So in terms of China and the regulatory factors being a reason for selling, I don't think it is. I don't think it is unless he finds something that specifically will damage Alibaba and their ability to continue to grow, which he has not said has happened. I don't think that he's selling Alibaba because of China regulatory risk. Now, that's the reason why he's not selling. He's not selling because he's paper hands. He's not selling because of regulatory risk. He's not selling because of geopolitic risk or anything like that. Now, the reason that I believe he did sell Alibaba is because he found something that he believes is better and even more undervalued, which is Tencent. That's the reason that I think he sold Alibaba for a loss, locking in tax loss harvesting, and then he moved that money over to Tencent. This is my guess. I don't know this for sure, but I really believe that he moved from Alibaba to Tencent, and I think the evidence that I'm going to show supports this suggestion, this idea. Let's go ahead and jump into the first piece of evidence here of why I believe that Mohnish recently moved from Alibaba to Tencent. This was just like 1 month ago. So he made this video 1 month ago, and listen to what he says are the two best big technology companies and his reasons why. This is a little bit longer of a clip, but I think this shows some positive light being shined on Tencent.
What I realized is if you look at these 7 or 8 companies, the 3 or 4 in China and, the 4 or 5 in the US, there are actually only 2 of them that understand capital allocation well. The 2 large tech businesses in the world that understand capital allocation well, according to me, are Amazon and Tencent. I don't think...
He didn't say Alibaba. He says the 2 companies that really understand and he's talking about all the big tech companies. So he's talking about like Tencent and Alibaba, maybe JD in China, right? Like the 3 big companies in China. And then he's talking about all the big tech in the US. And he says out of all those companies, the 2 that really understand capital allocation are Amazon and Tencent. He does not list off Alibaba. So this is the first sign of evidence. And let me have this play forward where he talks more glowingly about Tencent.
The others understand it, but I don't think they can execute. I'll explain why I say that. So if you look at the balance sheets of these large 7 or 8 players, they are all drowning in cash, except for 2 companies. Tencent has no cash. It has net debt. And for the most part, Amazon has no cash. It may not be net debt, but basically has almost no cash. But if you look at their competitors, so if you look at Microsoft, massive dividends and buybacks and, tens of billions, I haven't even looked at how much cash Microsoft has, but I have to imagine it's, up there, 50, 100, 150 billion, whatever. Amazon, Apple up there, Google up there, Alibaba up there, massive amounts of cash. And Tencent, no cash. And Amazon, no cash. So then I said, why do Tencent and Amazon have no cash when they have businesses? Some businesses of Amazon are gushing a lot of cash. Well, the reason is that in the case of Amazon, they keep throwing stuff against the wall. And they throw stuff against the wall at such a furious rate, in addition to investing in their existing core businesses, that they've never been in a situation where there's 30 billion sitting on the balance sheet. It's never happened, and it's unlikely to happen in the future. If you look at a business like Apple, it generates so much cash, but they have no use for the cash. So they invest what they can in their core business, And then beyond that, the only really meaningful thing they're able to do is buy back shares. And even after all the buybacks, they still end up with, 100 plus billion just sitting on the balance sheet. And it's gushing massive amounts of cash every quarter. And then when I looked at Tencent, I find that the cash balance is negative, and it's been negative for a while. And I realized that basically Pony Ma has a very simple business model. And I don't think he's ever going to describe that business model to anyone. So here I am, the Indian guy has to describe the business model because he won't.
All right. So this is like what Mohnish Pabrai describes as his aha moment, is when he realized that the big tech companies that have no cash, but they generate a lot of free cash flow, the reason that they have no cash is because they're spending it on different projects all over the place. And it is true. Microsoft carries a cash balance of like 50 billion plus. Apple, of course, has way too much cash. The only caveat is Apple generates way more cash than than Amazon or Tencent or Alibaba or really any of these other companies. But Apple doesn't just buy things or do aggressive investment. They build things out from their own products. They build things out from their own company, and that's the route that they go. So he is correct. All these big tech companies, aside from Tencent and Amazon, really don't spend their cash in reinvestment. And he likes the fact that these two companies are able to reinvest 100% of their cash. And he especially likes that Tencent runs at a net debt. They literally spend more money than they have. That's how aggressively they're reinvesting. Then he goes on to break down Tencent's business model. He finds it very attractive, a very good business model. And again, he's talking glowingly about Tencent. He previously owned Alibaba, and recently he just sold out of Alibaba. Listen to him talk about Tencent. This is 1 month ago, and it just gives me the impression that he switched from Alibaba to Tencent. I really believe that's what he did. But listen to him talk about this business model.
Okay, and we had to do that in Arvind's class. So the business model is really simple. He has two businesses. One business that he has is his army of software engineers. I don't know how many engineers he has, maybe 25,000, maybe might be 50,000 now, but it's a large army of software engineers. And this army of software engineers, the way the software business works is that the productivity difference between an incredible engineer and just a good engineer could be 1,000 to 1. So you would be willing, as a company like Tencent, to even pay $50 million a year to a truly, truly incredible software engineer. And
that is completely true. Software engineers, their skill and the return on your investment with paying them is not linear, it's exponential. Like there's some software engineers that can give you a lot better return on your investment if you pay a bit more than ones that you cheap out on and you pay for some junior dev that doesn't really know what they're doing quite as much. And that's the reason why when I look at tech companies, and I'm doing investments in tech companies like Netflix or Facebook or Apple, I look for how much they're paying their devs. Netflix pays their developers $450,000 on average. That's like the kind of starter wage, and they go up to $1 million plus. Some people think that that's crazy. The reason they pay that much is because they want the top tier developers. They only want all-stars, just 100% all-stars, nobody below that. That's what they want at their company. So Mohnish is, even though he's not a software developer, I think he understands the industry pretty well. You do want the best developers. They're in high demand, and you do have to pay a fortune for them. But in most cases, I think it's worth it.
And the run-of-the-mill ones, you might want to pay 100,000 or something like that. So there's we just have this massive variance. And Pony Ma understands that really well. And he's really good at sifting through, which are the rock stars, superstars. And he made sure that those guys are well taken care of, etc. So he's got this army of engineers. It's basically a massive bazooka that he has with this army of engineers. And he decides where and how he wants to fire the bazooka. And the way they fire that bazooka is, for the most part, even if they have some misses, they end up with this total dominance. So for example, they have total dominance on video games. Okay. And I realized that it really doesn't matter what the CCP or the Chinese government does regarding video games. It is like a pimple on a camel's butt from Tencent perspective. They have almost no profits or revenues from within China in video games. It's probably less than 5% of their video game top line and bottom line that's coming from China.
Does it sound like he cares about the Chinese regulatory issues that much? No, like I mentioned before, he's had multiple videos where he's asked about regulatory risk. He doesn't care about it. He's a bottom-up investor. He looks at the company. If the company's great, it's going to determine its long-term outlook and the returns of it more than all the stuff, all the different things that our top-down investors look at. If you want a top-down view, you're going to have to talk to a different investor like Ray Dalio. They are on the polar opposites. Mohnish Pabrai is bottom-up. Ray Dalio is a top-down investor.
So as soon as the Chinese Communist Party started making noise that this is not such a great thing to have all these people playing all these video games, within a femtosecond, that bazooka got completely pointed outside China. So he just took his army and said, okay, ignore China, let's focus on the rest of the world. And in fact, I would go even a step further and say, you could ban video games globally and Tencent would still continue to prosper because they would still have the army and the army would just get redirected. Yes, there is a portion of the army is very specialized on video games, but they would eventually be able to convert that into something else. So he's got basically this army which can do a lot of digital stuff in a variety of fields, and they're really good at it. So when Tencent makes, like, for example, they made $15 billion cash flow last year, Pony Ma goes to his digital army and says, what do you need? How many more engineers would you like? And the math is really simple. Every $1 billion you spend gets you at least 5,000 great engineers. So if you take an average engineer, 200,000, 5,000 engineers would be $1 billion a year of expenditure. Okay, so they tell Pony Ma, Pony, give me $1 billion. So Pony says, yeah, that's okay. Here's your $1 billion, but that's not enough. Can you take $5 billion? And they say, no, we can't handle that. It's hard for us to hire 5 or 10,000 engineers. I cannot hire 25,000 great engineers. I don't know what I would do with them and how I would deploy them. So I cannot take more than $1 billion. So Pony says, it's so sad, but it's okay. Here's your $1 billion. Now Pony has 14 billion left. So then he goes to his business number 2. His business number 2 is
he's broken it down into 2 separate businesses. One of them is the army of engineers. And again, this is all about Tencent. So one of them is the army of engineers that we just went over. Here's the second business of Tencent.
He's got 30 digital Warren Buffetts. Okay. And he says, these losers in business number 1, they can't use my money. So here's 14 billion. Have fun. And then they go and they invest that in some of it will be whole acquisitions, but most of it is small minority stakes.
I don't know if you heard that, but he said he has a bunch of digital Warren Buffetts, capital allocators that take the excess cash that the first business, the army of developers and engineers, can't use. They take that excess capital and then they invest aggressively in growing digital assets.
In a number of businesses. Okay. And that digital Warren Buffett, which is not one guy, maybe 20, 30 guys, put that 14, 15 billion to work. And just to make sure that all the money is used, Pony makes sure that they spend a little more than the cash he generates because it bothers Tony. It doesn't bother Sundar that 70 billion earns less than 1%. And it doesn't bother Apple that 100 or 150 billion earns less than 1%.
That one, I think I would push back a little bit on Mohnish Pabrai because Apple is aggressively working to become cash neutral, which means they'll have the same amount of debt as they have cash. So they're literally cash neutral. But he's right that they have to get there by doing aggressive share buybacks. So Apple has no way to reinvest all their money. That's what Mohnish is pointing out. And Apple's reinvestment is going to be limited. So the way that they're deploying their masses of cash is just by share buybacks. But what he's described here with Tencent is basically they have the army of engineers, and then they have the digital Warren Buffetts that do all these aggressive this aggressive capital allocation and buying up different companies, whether it's in the US or all across the world. They have ways to use their cash. They're aggressively reinvesting the cash. And this is what he likes about the company.
And it doesn't bother Satya that, 80, 100, 150 billion earns less than 1%. It bothers Purnima. And so Purnima doesn't even leave $100,000 with himself. If he makes 15 billion, he spends 15.5 billion because he wants to borrow at 1%. He doesn't want some checking or savings account giving him 1%. So he makes sure that when bazooka number 1 cannot use the money, he puts it into bazooka number 2. And once he's fired both those bazookas, he's got no money left and he's very happy. Okay, then the following year, maybe he makes 20 billion. Again, he goes to his bazooka number 1 and they say, Pony, you come to us every year and you want to force feed us 50,000 engineers. We can't do it. Okay, I can take 6,000 and that's it. I can't take any more. So he gives them the billion too. And then again, he goes to the other team and says, my loser team number 1 cannot use any more. You go to number 2. So now here's the economics for the last 20 years, which Purnima will never tell you. I have to tell you, the Indian guy in the wonderful blue kurta.
I just love Mohnish. Just the way that he talks, it's great. He has a YouTube channel. I recommend just subscribing to it. And if you're doing, you're cleaning your home, doing whatever, just listen to this guy talk. He's great.
Okay, model number 1, bazooka number 1, earns 65% annualized return on capital invested. Okay, day in and day out. Any billion he puts in historically has made 65% a year. Model number 2 makes 35% a year. What a terrible business. Okay, so he's just got these 2 models. One has been pounding out 65% a year, and the second one has been pounding out 35% a year. Okay, the DNA. So I told you there were only 2 large companies that knew how to do this with using all the cash. What Tencent does actually runs circles around Amazon because Purnima is never going to hire a driver or a warehouse operator or some, freighter aircraft pilot and put them on his payroll. He's just not interested. He's only going to hire software engineers. Okay, that's what he wants to do. And so when some business needs drivers and warehouses and all that, Purnima is going to have a minority investment in that business through his bazooka number 2. So he has a stake in PDD and JD.com and Meituan and all these companies that do all this crazy heavy lifting. He still gets the upside on those, but they're not on his payroll. Okay, it's an investment. Jeff loves to have those people on his payroll. And I think it's somewhat inferior at the end of the day to, now it gives you more of a link with the customer. The relationship is tighter and the service levels could be probably be better. But I would bet that given the superiority of the Tencent model, it would not surprise me that if we look 10 years or 15 years from now, that it's the most valuable business on the planet. And to a large extent, I feel that they may even be able to transcend a bunch of stuff that the CCP is throwing at them and continues to throw at them. So,
does this sound like a guy that hasn't bought Tencent? Not in my opinion. When I listen to this, I see someone that's you can tell the excitement. He is clearly excited and enthused about Tencent. I don't think there's a question in my mind that he's bought it. Now, I don't know that for sure. I haven't seen any reports or anything, but I'm willing to bet quite confidently that in the future, you're going to see Mohnish take the loss on Alibaba, which it's a problem buying high and selling low. That's what he did with Alibaba, but it's not as big of a problem if you buy high, sell low, and then also buy low, which is what he would be doing if he sold Alibaba to buy Tencent at today's price. Both of them have been affected. Both of them have traded down. In my opinion, it's very clear that he is very enthusiastic, excited about Tencent. He had kind of an aha moment realizing the qualities of this business. He talks, in depth about not caring about the regulatory burden. He just barely said that he thinks that Tencent will transcend the regulatory burdens of China. He doesn't think it's going to be a limiting factor in his investments. And this is not unique. He has other videos talking about Tencent in a glowing manner. And even before his sale of Alibaba, I noticed him talking particularly positively about Tencent. So I really think, in my prediction, I do not believe that Mohnish here paper-handed Alibaba and just sold out of it, and he doesn't know what to do with the cash. He would never do that. I just don't see him ever doing that. I think he took the money out of Alibaba, he purchased Tencent because he's very excited about it, and he looked at it as a better and best situation. And I don't blame him for it. When I hear his pitch on Tencent, I think, man, this sounds like a really good company. I want to own a little bit of this company, right? That's a pretty good pitch. I know a lot of you are probably listening to this for the first time and you're thinking, Tencent sounds pretty great. Maybe I should buy some of this company, right? That's your reaction after listening to him talk about this in such glowing terms. So I don't think this would even be a bad move. Moving from Alibaba to Tencent, I think they're both great companies. But where does this leave us in terms of the Alibaba investor? What does he think about Alibaba anymore? Is he more bearish on it? Does he not think it's quite as good? Is there more reasons why he sold out of Alibaba in particular to buy Tencent? Those are other questions. And he actually goes on to give some insight into that as well. Here's a student in one of his lectures that asked specifically about Alibaba. Listen to Mohnish's response here.
That's great. It's okay. No, I think Alibaba clearly had some stumbles with different actions that were taken against the company. Many of those actions might be justified because many of the ways that the company did business might be illegal in the US, for example, in the way they kind of restricted things and so on. But I think that at the end of the day, it has a very talented management team and it has a very dominant footprint in the minds of its consumers. I think the business will do fine. And they're pretty smart about the way they go about it. I don't think the model is as good, in my opinion, as a Tencent. But they both can do very well.
So obviously, he's not bearish on Alibaba. He doesn't think that Alibaba is going to do poorly. He said that he thinks that both of them can do well, but he feels like he just found out about something better. And a lot of times that's the case with investing. When I look over my portfolio and the many companies that I have, a lot of people want to know what is a buy and what is a sell right now. And if I trimmed one position, am I no longer bullish on that company? Or even if I sold out of a company completely, does that mean I'm no longer bullish and I'm completely bearish on the company? That's not usually the case. All of these are great companies. There's so many great companies out there that the question in many cases is a question between better and best. I think that the way that Mohnish looks at Alibaba is he thinks that it might be a better option than most other investments out there right now, but it's not the best. And he probably thinks that Tencent is the best. He talks about their business model as being even superior to Alibaba's. So in summary, I think that Mohnish Pabrai is still bullish on Alibaba. I still think he thinks the company will go up in value and it's still a good holding. And I think that if he hadn't found a Tencent, a company that he thinks is even better and it has even more attractive qualities, he wouldn't have sold out of Alibaba. So I see this as a selling low and buying a company that has better qualities, and in the process getting those nice tax losses, right? He can write off the tax losses in Alibaba and use that for any future gains. So that's my thoughts on this whole Mohnish Pabrai selling out of Alibaba situation. I hope you enjoyed the video and the update, and I'll have another one probably on this channel tomorrow. So make sure you're subscribed to the channel, and I'll have another update on another company tomorrow.